We had Marico, which reported its numbers yesterday. Overall, when you look at it, the company has reported an underlying volume growth of around 1%. Inline set of numbers coming in with the street estimates from the company. Let's go across to the management. We are joined by Mr. Saugata Gupta, who is the MD and CEO at Marico. Let's bring on board to understand more about the earnings. Good afternoon, sir. Thank you so much for joining in with us on ET Now today. It's a pleasure, as always, having you on the show, sir. So, Mr. Gupta, I'm going to jump right in, and I'm going to talk about the demand trends. Now, how has the demand trends been this time around? What is the consumer sentiment looking like, especially for the home care, the personal care premium products, the segments over there, the Saffola side as well? How has the demand trend been over there, given that everything has started coming back to normalcy now?
So I think if you really look at it, what we see is two things. One, as far as the discretionary portion is concerned, obviously because of the lower base, things are coming back to pre-COVID levels, and therefore there is getting growth. Having said that, obviously in the mass end of the segment, especially rural, we are seeing demand stress, and this demand stress had started even from the previous quarter, which is Q3. It's a combination of the fact that we are lapping a high base, and also the significant inflation. And obviously, as you know, that there is a significant input cost inflation, but I think companies are being careful in passing that that cost down to the consumer, because there is obviously a stress which is there in terms of consumption and the consumer disposable income. So I believe that this is going to be a little stress like situation, which will only ease off towards the second half of the year. Having said that, I think we have a slightly different situation, considering that copra, which is a significant portion of our portfolio, which is Parachute coconut oil, and a significant portion of our input cost basket, it is relatively benign because it had faced significant inflation in the last year.
Right, sir. Obviously copra is one part, but I do want to understand in terms of edible oil prices, that is also, like you mentioned, we are seeing an inflation coming in over there. So is there any sort of down trading that we have seen coming in on those segments, because edible oil prices are rising and companies will have to take a price hike. So what is the trend that you're seeing there? Any supply issues coming in on the edible side as well, edible oil side?
I think as far as supply is concerned, we are fairly comfortable. As far as down trading, I think what we are seeing is that conversions from, rather the up trading and upgrading is not happening right now. Having said that, if this inflationary situation continues for a longer time, yes, there could be a down trading risk. But you must realize that Saffola operates at the very top end, and a lot of Saffola consumers, being very health conscious, obviously use less oil, and therefore that risk is a slightly lower kind of a risk. But with these kind of high prices, the the consumption in terms of getting new consumers, that has got a little deceleration.
Okay, and just in terms of any, because this is a macro situation which is going on, evolving, and you said that maybe it'll take a couple of quarters at least, to come back in terms of the performance for an inflation to settle down in terms of these prices. So what can we expect in terms of margins then? Right now you have been stable in terms of margins on a year-on-year basis, but could we see some pressure coming in, or margins will be at around these levels?
So I think, as I said, that for us it's a slightly different kind of a situation given the comfort on the copra prices. We are fairly confident on an annualized basis to deliver 18 to 19% operating margin.
Okay, 18 to 19% going forward as well. Sir, I want to talk about one point is the Parachute segment, now Parachute category. Could you help us understand what has happened in the category? Because what is the reason for the subdued volume growth? And, is there any market share loss coming in over there, or has the company managed to still gain market share there?
There has been a significant gain in market share. We have continued to, as you know, and 97% of the portfolio have continued to hold and gain market share. I think Parachute has to be seen in the context of it is minus 1% in volume, but the fact that last year base it grew by 29%, so a 2-year CAGR is around 13 to 14%. So I think we are comfortable as far as our run rate is concerned. The overall annualized volume growth of Parachute was 5%, in line with our medium term aspirations of 5 to 7%. So I think we have taken some proactive pricing calls in terms of some price reductions, which we have taken in some in between January and March. And given our focus on distribution, as long as we take proactive pricing calls, we are fairly confident of delivering again this year the medium term volume aspiration of around 5% plus.
Okay, Mr. Gupta. So thank you so much for joining in with us on ET Now. It's always a pleasure having you and getting your insights about the company as well. So that was surely Marico's management for y'all. But let's move on to another management.